Hello, good morning everybody. Welcome back to Orb Plus. Today we have another video on our hands, another day of trading. First off, let's look at what news has to offer because some important details need to be said. 4 p.m. President Trump speaks. That was not there before. It's there now. Wednesday, we cannot trade. Triple red, all CPI. Big bad no-no. Cannot trade Thursday. 2 PPI folders, triple red the same. And Friday, 2 red, potential trading situation, potential. I'd like to wait and see on Friday when we get to actually taking trades if it's possible to even take a trade knowing news and all it's got to offer. That being said, right now, today, it's just one orange folder. I'm expecting it to have some form of impact on what market does, but I'm not going to hold my breath and say it's going to go our way. Let's go ahead and mark up this, do it nice and fancy looking. And I already know what some people are going to probably say in the comments, though at the same time, I'm convinced, half convinced that no one's going to say anything, just because I don't think anybody watches this. We could have held on to the trade from yesterday and made 4 take profits more. And to that, I'm going to say, no, I couldn't. No, I could not. Due to conflicting schedules and the fact that, sure, from here to here, we made a profit, we would have been stopped out in this. We could have gone all the way up to here, but that would have been a very, very risky thing. And this trade was already risky. This idea said price was going higher. And sure enough, it did. It went higher. But it also, before it went, like immediately after it got as high as this, it shot way beyond that. And we would have been stopped out. And then some. That's a big ouch. I don't know if y'all realize that or not, but that is like a serious oof. Yeah. Let's go ahead and head over here. I'll minimize that. Move all of this. Move all of this. We're going to go to the hour on both, just to keep it nice and simple. Similar situation, similar story. Hopefully we can get a better picture on stuff. I don't know if you guys can tell or not, but I am wide awake today. I called it yesterday. I had the best sleep I've had in days. Oh my gosh, am I wired almost. Like, I have energy to spare. I know it's going to be that much harder for me to go to sleep tonight, later on. Right now, the hour, I'm going to do this. The good news is we have more of a spread we can work with. Up and down here, gold, down up there, gold. This is our spread for session high and lows. We don't care about the lows of this session because they've been passed. This is the highest point within an Asian session to look for. When the high off of London session is made, that'll be part of this spread here. Are we in a downtrend at the moment? Down, up, boom. Did we have break of structure? Yes, we did on this candle here. We're in a downtrend for the hourly time frame. Should I be expecting price to continue lower? I want to stop and wait. I want to, before doing this, I want to set up NASDAQ. I want to see what it looks like. And from there, work our way forward to identify all major confluences needed for today. And only after which am I going to be really satisfied with looking at these charts and going, yep, I think this is going to happen. I'm getting good at this, chat. I'm getting good at coloring on a chart. I don't know if you guys knew that. I'm getting kind of good. Kind of. Okay. Same situation here. High and low. Waiting for a high off of London from there. Mark. And then we have our spread for most recent price action. We can mark ourselves up for that later on. We want to wait for this candle to close before we really detail the highest point on London session, and from that we work our way forward. All right, without further ado, on the S&P first. We had a fair value gap here. It was inverted here. It was closed below. That inverse fair value gap resulted in a break of structure on a high time frame there. What's the daily say? Are we down for the day? No, we're up for the day. Prices had a huge spread throughout that. Price didn't know what I wanted to do there. So what am I looking at on the daily specifically? I'm looking at an uptrend, I think. Yeah, I'm looking at an uptrend because none of these lows have broke structure beyond this. And this is a higher low, higher high, higher low, higher high here. So now we're looking, I believe, at we're looking for a retrace in this somewhere. I imagine Wednesday and Thursday are going to be the largest leaps, and they might break structure on the daily. They might. Might. I'm noticing we have a high here that has not been broke past. We're going to mark this high. How do I identify a high? Remember, up, down, highest point between the two, right there. That's our high point. The next available high is way to flip up here, which is almost completely unrealistic to look at. But we're going to mark it anyway, just for reference sake. We're going to put this green here. We're going to put this green here. This is to notate that this is on the daily. The white is recent, the green is daily. And for funsies, why not? Because these are relative equal highs, but we want big fish. We want up here. We're going to keep these three in our memory bank. We're going to understand stuff when it comes to that. We have, of course, have all these lows here. I'm noticing a pattern though. Like these are like relative equal lows. They're like stacked up above, staggered, right? This is prime time for a dip down and to claim up all this liquidity. Technically, per the daily, this is a downtrend. We have highs here, lower low, lower high. We should be seeing a retrace back down to the lower low. I'm not going to say it's happening within the next 2 days, but here in the next month or two, it'll come down. Per this says we're in an uptrend, but if you zoom in, because this is like the past like 3 months worth of price action, all of this says downtrend at the moment. At the moment, though, let's zoom in because the bias is based on the day. Daily bias says uptrend right now. So we'll keep that in mind. What about the 4 hour? What does 4 hour say? 4 hour is similar. Yeah, similar. Right now, up on the 4. And per the hourly, we just broke structure to the down. Right here. We have a fair value gap to look at. Right there. If this is respected, it'll continue down. If not, it'll continue higher. Regardless of what happens before 8, we'll mark out another high for a London session, and then from that we'll work off of the fair value gap when New York Stock Exchange opens. Similar situation here to this. Boom. Same situation. We're going to mark high as soon as it forms, and then from that work off of fair value gap that is present and visible, and then we're also going to mark out highs and lows and then look for that key level to get hit there. If it's respected, it'll go lower. If it's disrespected, it'll go higher, obviously. This is a large fair value gap to attempt to disrespect, so right now my thought process is it is going to go lower based on London session's price action, right? It's currently what I got going on. That's what I'm thinking. What other stuff? What stuff can I really do stuff with? We're looking for a breaker block to form, I think. No. On the higher time frame, we're looking for a retrace. Does the 4 hour on this look the same? Yes, it does. Okay. Similar situation on NASDAQ, broke structure there. We're wanting to take a trade on the NASDAQ specifically. So here's what I'm going to do. I'm going to go up to the daily right quick. Something to note on the NASDAQ, we have a huge line of red down. Whew. Walking tacos, man. Crazy, crazy fire. I got some salsa verde on mine. It was pretty dang good, but man, it's just spicy. Okay, huge line of red down. Very different chart on the daily. Very, very different chart on the daily. I'll say we have our daily highs up here. Again, very unrealistic that they'll hit all the way up there. We're just gonna keep those in our minds temporarily. We don't want to take that crazy confluences, right? I get that made no sense. They're not equal highs. They're not relative to each other either. Very different charts on the daily. Again, we have cumulative lows across this here, and even on down into this right here. Liquidity could come down, sweep up all this, try and push higher. And again, that'll happen over the next couple of months. It won't be a 2-day, 3-day thing. So we'll have to keep that in mind. That being the case, even again on the hour, we broke structure here. Don't think price is going to go lower. We're going to wait. I'm not going to marry the bias entirely, the daily bias specifically. I want to look and see exactly what price is going to do based on current price action. If it respects the fair value gap, cool. If it hits this low and we get a strong reaction and it breaks that fair value gap, also cool. We want to know before we enter the market, and then from that we're going to take our trade based on the move for the day. Looks like this right here is going to be a high for London session. So we're on the same page. Which works. It's cool. No biggie. I'm going to go ahead and pause the video. I don't think there's much else I can really cover at the moment. We have a mini fair value gap right there that we could look at. Mini fair value gap is still a fair value gap. That's on the NASDAQ too. Let's see if S&P has it. Looks like it does. That's not inverting anything. That's just a fair value you have to take note of right there. We want to take that into consideration as well. We have our price action range. We have our 2 fair value gaps we're looking for disrespecting on both sides. If this is disrespected, it'll continue on down. If this is disrespected, it'll continue on up. And then, of course, we have our session high here off of London. We're going to try and take a trade on NASDAQ for trading view, and then for trade locker, we're going to stay on the S&P 500. We want to stay on this as long as possible. NASDAQ on the trading view is solely to get a large return off of, right? And I am not comparing the two. I'm getting used to reading the charts and differentiating between the two, because S&P divergences are a huge thing that can indicate where price might want to go based on another chart's data. I want to use that to my advantage. I want to get used to using the S&P divergences because they happen more often than you'd think. I mean, shoot, does this not present one? Kinda. This right here, from here to here, it's higher. And from here to here, it's lower. This fair value gap's already been disrespected on the NASDAQ. There it goes, getting disrespected on that as well. We're not going to get rid of it, though. At least not yet, because we still have another 50 minutes for this candle to close, apparently. This is 7 to 8, so this candle's got to close before we can delete this fair value gap, because price could easily come up and stay within this fair value gap, and that's honestly what we want to happen. Yeah. That being the case, I'm going to pause the video now because I don't think I can really go over anything else. I spotted that fair value gap last second, and there's not much else really that I can really do stuff with. We have an inverse fair value gap. We have a break of structure. Technically, right now on the hour, we're in the downtrend, but everything else is saying we're in the uptrend. Before I marry bias, we're just waiting for price to do its thing, give us a reasonable range to work with, and then from that, using our confluences on the higher time frame as key levels to determine where price might want to go for the day. And of course, with the expectation that there will be reactions for every move that occur. So, with that being said, I'm going to be right back. Okay? Okay. And that's it. Turn on the light. Let the sun shine. It's a light bulb, but still, you get the point. It's now 8. We haven't made a high. I'm looking for a downward candle so I can accurately mark these two. And from that, wait for a key level to be hit. What I think is going to happen, one of two things. Either A, I'm going to get a high and then a retrace, and then from that, we'll have a price range we can really work off of. Or 2, we'll have this fair value gap completely disrespected. This high will be nil. We won't be able to use this because we'll have a key level that's been disrespected. From that, we'll be looking for signs of continuation or a confluence lineup that'll say, yep, we're going higher, or nope, we're going lower. Yeah. I'm simply waiting for this candle right here to kind of close, because there's no real high in this outside of these two here. It's currently 8 a.m., 8:02. So I think what I'm going to do is, I don't know what to do in this instance, actually. I don't know what to do here. Everything's lined up the way it's supposed to be. This retrace is valid. It's cool. We swept all the lows over here. Like this. We swept all of these lows in this. We have a move up now. We're looking for a retrace back down, a small one. Either a small retrace or a continuation that price is going to be moving much, much higher. Let's do this. Technically, this is the high of London session. Highest point between these two lines is the high. Boom. If this is the case, technically, that's the key level hit, right? So we go down to the 5 minute, and from here we look for, I get it hasn't been 5 minutes past 8 yet. Stuff. From the 5 minute, what will we be looking for? An S&T, or break of structure, or inverse fair value. Looks like we're in line to get an inverse fair value up first. Because we've already broke structure on the 5 minute for this. Should I do that instead? Would it have been better of me? Because there was no real defined high on the hourly. So technically this right here would have been the highest point. How do you identify a high? Up, down, boom, highest point, boom. Since then, we've gone up. We've hit this key level and gone above it. What is my defining factor here? Because from here down, we were in a downtrend. Cool. Cool. Now we're up. We have break of structure here out of this downtrend. How? Because it closed above the most recent high here. And it wasn't until this candle that we got a closure and defined break of structure. So now, we, on the 5 minute, now have to wait. What for? We're waiting for our next set of confluences, continuation confluences. Either fair value gap, breaker block, order block, or within equilibrium. That's got to be a thing. Equilibrium is taken from the most recent high down to the most recent low, so from here down to here. And then, with that being the case, we're also looking for one of three other things, either an inverse or a fair value gap, breaker block, or an order block. Order blocks are the moves before liquidity sweep. They're the things that cause liquidity sweeps. And breaker blocks are this here. We're going to figure this out. I'm going to figure this out. One way or another. Things are going to get figured out. Real quick, too. So, I'm going to pause the video again until I have more to work with. And then from that, you'll see my progression. Okay? Okay. I'll be right back. Something I just noticed on London session, right? Let's go back up to the hour. Because I honestly, like, reading this now, I'm like, oh, I should have been paying attention here. Price came down and hit this, which is cool, right? This filled and respected the fair value gap. Treating that like a key level, move on down to 5. Come on. There you go. Treating that like a key level hit, we move down to the 5. This is the line we saw on the hour, right? It came down, but price moved back up. Cool, no biggie. So if we treated this like a key level, right? We had an order block, a sweep of liquidity. Okay. This being a key level hit, we would have went into the 5 minute like we see here, right? Looked for an inverse fair value gap, which is what we got. Breaker block here, because an order block that was moved within the same price range here, right? Breaker block. And then on the 1 minute, break of structure here. Technically, we could enter right now and just watch it go up, which is cool. However, New York Stock Exchange being open creates something new. Other people in the market, right? So, as much as I want to enter off of this set of confluences here, at the moment, it would be a bad idea. It sounds like a good idea. I was able to identify all of that within the span of this. And it was spelt out to me, like, from this move on up, right? I want my confluences to be sound. Treating this like a key level makes sense, but on a higher time frame perspective, this is tiny compared to this. I might miss out on this leg up, but if the reaction of a respected fair value gap on this time frame specifically occurs, this move up will have meant nothing. The big fish is the reaction off of this. If this is disrespected, that's a key level hit. Technically, key level hit was right here. This was our key level. We're on the 5 minute right now, looking for a break of structure, an inverse fair value gap, or an S&T divergence. We have legit 10 minutes into this right here. I want to go to trading view because we're here now. 5 minute on both. Boom. This is where we are. This is where we are. Good. That's 8. This is a 10-minute delay, so 2 candles behind is what we're looking at here. Same story on the NASDAQ. We had push down, key level hit, inverse fair value gap on the 5 minute. To identify a breaker block, you look at the liquidity sweep we thought happened, look for an order block that occurred. Within the same price range, we get a retrace. Breaker block, push up, break of structure on the 1 minute, continuation confluence. I say continuation. This would be entry point here. But because this happened in London session, I'm inclined to stop myself before I make a mistake in hopes to catch a bigger fish. Seems we have an S&T divergence here. This said price wanted to move higher, where this said price wanted to move lower. In this instance, the S&P is the lagging index because the result of this being the case, said price went higher. We actually broke structure on the 5 minute, and from the, on the 1 minute and the 5 minute, and then should see price continue higher. If so, that works. I mean, yay. This, me being able to read this accurately enough to see price moving higher, that works. That's cool. Okay. I want to treat this right here, though, as a key level hit. Sweep of liquidity. We're looking for a break of structure, inverse fair value gap, or S&T divergence on this move specifically. We have a leg up here. This says down on the S&P. That says down on S&P, yet that continues higher. Cool. Could have I missed an opportunity? I am gonna say yes. Yes, I have missed an opportunity. But at the same time, I'm confident that there might be a bigger fish today to catch. President Trump speaks at 4 p.m., according to news. So we have plenty of time within this. This is our window of opportunity here that we're looking for. I really hope it presents me something, because if this is the move for the day, that kind of sucks. I'm going to go ahead and do this now. Is that a good one? When identifying on the hourly highs and lows, if either becomes unclear for session indicators, move down to the 5 minutes best to identify the high and low of the session. Because, and this note is primarily because on the hourly, right? We'll scale that down right quick. On the hourly, we had this huge move on Asian session, which worked for us. Perfect. We have a high. That works. We also have a low from this move as well. Okay. We don't have to worry about any of this. Just know that this right here is our overall price range. But London session was going to create a high that was not passing Asian session. So then becomes, what was price? What is price going to do? Because we could keep going up in this, but there's a problem. It's a straight line. There is no low in this. If there were, we'd be counting the low throughout this. So we'd have to move to the 5 minute to best identify the high and low of the session. Highest point of the session? Right there. Lowest point down there, which works for us. It really does. We wouldn't care about the low of Asian session because it was past. And the high is brand new. The only other high that we could really count is the one all the way up at the top of Asian session, which, because this hasn't passed, could be a take profit level. So, with that being the case, I think this is the best move that I could take when it comes to identifying highs and lows in session. For a second, I thought that was SMT divergence right there, but it's not. That's saying down. That's saying down. This is a bowl shape. The S&P is lagging behind, I think, because we have a mini SMT divergence right here. Right here. This is saying lower, whereas this is saying higher. If this comes to fruition and price does wind up breaking structure up here, it'll be because this right here happens. to be going lower first. I don't know though. All the indicators on the Nasdaq say higher, and so far it has gone higher. So that's the thing. Again, we're waiting on either break of structure, S&T divergence, or inverse fair value gap. And right now, it's starting to look like the only option for us is going to be an S&T divergence, and I'm not seeing one as of yet. This is 10 minutes delayed. This is current price action, what we're looking at now. This is current price action. I really need to get the hang of doing this sooner. It's 8 o'clock right there. Good, like up there. That's pretty much the same. That is the same. Okay. On the NASDAQ at the moment, we're just going to... Oh, I need to remove all of that. Oh. High. This is just so I'm able to see what I'm doing. 8. This 5-minute. For 2 reasons. I need to get the high off of this here. Good. And I need to mark 950. Good. And 1030. Good. Okay. So this is a thing now. We're going to keep this here. Hello, move. That was a move. Let's see what this is doing. Hello. Down. Down. Good. We want to stay on the S&P for trading locker. Trade locker. Not trading locker. This is a low here. This is a low here. That's a high there. That's a high there. That works. I think we have an S&T divergence right here. I think we do. As you can see, it starts here and goes down to this right here, right? And unlike that, we have pretty much a straight line across right there. I think that's our S&T divergence that we're looking for. What does that say specifically? I think price is going to go lower, primarily because it's the NASDAQ saying it is going lower, right? Which works for us. That's our confirmation. If the SMT works, we're looking for, again, for value gap, breaker block, order block, or equilibrium. If we treated this like it was a sweep, we'd be looking for not a fair value gap. It would not be a breaker block. I think this would be an order block to further sweep, which means this right here would be our next up. Because we want a sign of continuation going up. Order block would make sense here for sweeping that, which would mean we'd be looking for price, for price to come back down with an equilibrium, which would have been right about there, and then am I doing this well enough? I think I am. Kinda. The idea is a long position because of general trend. It says up, it's broken structure on the upside. We've had a key level hit to the upside. The general trend is up. The trade idea is up. So then becomes the question where to enter. I think we need to wait. How long? I don't know. Price is very indecisive at the moment, so we have a low that just formed right there. Same story here. Is that? No, it's not. Very close, though. Very, very close. It looked like an SMT divergence occurred again. I'm like, what the heck just happened? We have an SMT divergence. Yeah. Hello, break of structure. Potential. Hmm. if I'm going to rewind to the back, I'm treating this like a key level hit still, which means we're on the 5 minute looking for our first real set, and I mean defined confluence. I'm going to wait patiently. We have 2 minutes for that count to close. Right now, it's matching pattern between charts, so S&T's out of the question right now. It's a break of structure or an inverse fair value gap that we're after. Our closest fair value gap is right here, by the way. So if we get a break of, it'll happen as a break of structure first. I'm gonna pause the video until we can identify each and every single one of the confluences. This way the video is shorter and you guys get a quick, okay, this is where we are at the moment. I'm going to fast forward to the good stuff because stuff. BRB. Okay, so we took a trade. Before we get too much further to the right, let's dissect some stuff right quick, okay? Okay, let's go back up to the hour. We took a trade on the S&P 500 for Trade Locker and the NASDAQ for Trading View. What happened? What's going on? Huh? What's happened? So, we had key level hit here, right? We couldn't really identify it at first, so we went down to the 5 minute, determined, okay, this was the high for London. Boom. Key level hit. From that, we went to the 5 minute, same story here. Waited for a break of structure. We didn't get a break of structure on the S&P 500, but we did get a break of structure on the NASDAQ. It closed below this low here. Based on that, we went from the 5 minute to the 5 minute again, and we identified that this was a breaker block because it is within the same price range of this here. It's a retrace that failed and respected the order block from previous. Based on that, we said, okay, this is a breaker block. No biggie, no problem. Let's go down to the 1 minute now. See what's going on here. We wanted a break of structure, an inverse fair value gap, something along those lines. We got in after the break of structure here. We had a high here, closure, enter, right? That is what we did. General trend at the moment is up per this retrace here. In general, per the hour. For this whole move, it's an uptrend at the moment. The hourly says we are in a downtrend. Just so we're on the same page. This says we're in a downtrend. Okay? The idea is we're in the middle of this fair value gap here. And everything up to the point, except this break of structure here, says we're going up. That being the case, the idea is that price is going to continue up and disrespect this fair value gap. Because it respected this one. Right? On the high time frame, it respected this fair value gap and continued higher. The idea is that it's going to continue higher, and from that idea, we took a trade based on the confluences we found. Am I confident in the confluences we identified? Yes, I am. The only thing I'm a little shaky on is the breaker block right here that we identified between this price range and this one here. It was respected. Though on the NASDAQ it was a break of structure here, we did not break structure out of this low here. It was only this one. So this is a valid break of structure, and because we have a leg up there, and a leg up here saying price is going higher, the idea is that price is going higher. The idea, so far, based on the trade we have for S&P 500 is correct. I now want to pause the video, and this is me legitimately just going in and just clarifying every single step, right? Getting it all the way fine-tuned. This was one of the faster trades I've ever taken. This is also a confident trade. I'm confident in my idea. I'm confident price is going higher. I am confident in it. If I'm wrong, so be it. That's okay. We have our stop loss set up on both. Stop loss is set pretty close to this low here. And that is solely because this was a sweep. And the confluences here said, yes, price is going higher. And that's what we're waiting on, for price to go much, much higher based on this sweep of liquidity and respect of fair value gap here. Outside of that, we have our take profit way up here. This is Asian session high. There weren't many highs outside of this, and I'm not expecting it to go higher than this. At the same time, if for whatever reason on the 1 minute we come up and respect this end of the fair value gap here, we don't invert it, but we respect it on the 1 minute and we break structure within this range, I'm more than happy to leave trade knowing that we used the confluences needed to take the trade to begin with and come out profitable at the same time. So far, everything's pointing upwards outside of the hourly. The daily is still counting upwards. And generally speaking, on the day, we are in an up motion. So, that being the case, I'm going to pause the video now. Again, I'm going to surf the web, have some fun. I'm going to relieve myself of the stress and worry that this is going to have me in if I were to sit here and just stare at it for the next 3 hours. And hopefully, fingers crossed, I am going to pay attention to the 1 minute just to witness it continue up. I'm going to wait patiently for the confluences needed and the range I desire to be hit. In the event this is disrespected on the hourly, because this is an hourly fair value gap right here. If this is disrespected on the hourly, I am strongly considering it being a break of structure on this note here. If that's the case, we should see price continue up to Asian session high. That is our take profit. Once that's done and out the way, we'll be looking for break of structure within this range instead of this range. But we need this to be disrespected first on the hourly time frame. It's got to be completely closed above right there. Right now, we've got all this leg up, and it's a balanced leg. It's slowly continuing. So I'm going to pause the video now. I'll be right back. I am very confident in this trade. Very, very confident. Let's see what today's decisions bring us, shall we? What happened? What is going on? So, we got stopped out. Big time. Like, we were gold all the way through here, right? And my thought process was it was going to go higher. It was okay. It looked good. Nope. Came down, searched and destroyed me. Literally, I had my stop loss put like right below this. And price came down, took us out. The trade idea was correct up until this point. We had profit we could have left on. It was gold. We didn't leave. I held on to it thinking, yes, it'll go higher. It did go higher. The trade idea was correct. Ouch. Big ouch. We should have seen it. I should have seen it coming. So I think I'm going to make another note. When in trade, sorry, when in active trade, if the trade was entered mid FVG, mid fair value gap move, and the fair value gap was respected via the high that look for signs of continuation and exit trade once they appear. Not after they close. I think that's a valid note to have. I held on to trade because the idea was right. Up until we had a move, a retrace on the general move up. We had break of structure up here, which was cool. On the hour, it was respected. We should have exited within this. We should not have held on to it through this. No biggie, no problem. Genuine mistake on my part. Note has been made. We lost today's trade on trade locker. We lost how much? $3.46, which bites. And then on Trading View, we lost $12.10. Big ouch. Big ouch. Today was one of the 2 days I was kind of hoping we'd get a decent amount out of, and we got stopped out reasonably so. No biggie. We have literally the rest of this month to figure out how we're going to get in the green again. The trade idea was correct. I want to say it nice and proud. The trade idea was correct up until it wasn't. I hope you enjoyed this video. If you did, drop a like, leave a comment. Subscribe if you're new on the comeback. I'm literally recording on this channel every single day, Monday through Friday, around 6 a.m. I don't know why this computer is doing this. I'm going to have that fixed here soon. But, yeah, I'm getting better. I'm learning from my mistakes. I'm noting them down as I go. And that's ultimately what these videos are about. Me taking a trade in market and learning from the mistakes. So that way the next time I try and take a trade similar to this, I either have the knowledge not to, or I know what price might do, and from that I can take a more reasonable trade. Less risk, more profit, better off for me. Yeah. I hope to see you guys in the next one. I will not be recording Wednesday. I will not be recording Thursday because both of them have red folders with acronyms I don't know the names to, but they are the no days. We don't trade on those days. Friday we have a double red folder, but at the same time, it depends on what market wants to do that day. From there, we might take a trade, we might not. I don't know. I'll see you guys Friday. Okay? See you guys Friday. Have a good one.